On the surface, the elderly Florida resident, a native of China, seemed to be an acceptable insurance risk. He appeared to be in good health, had never used any form of nicotine, and did not drink alcohol. Financial statements revealed a net worth of $3.7 million and an annual income of $225,000. A life insurer approved him for a $1 million policy in July of 2023. One problem: rather than a millionaire Florida restaurateur in perfect health, he was in fact a small player in a large insurance con that led to a July 2025 indictment in federal court. A few months after obtaining the policy, the man died in what turned out to be his primary residence, China. His policy was just one in a scheme that ran for nearly a decade. The life insurance industry loses an estimated $75 billion a year to fraud. For many fraudsters, the caper that gets them caught isn't their first. According to RGA's Global Claims Fraud Survey, fewer than 2% of identified fraud cases are prosecuted. When insurers fail to report fraud, true victims are honest policy seekers forced to compensate. Insurance fraud costs the average U.S. consumer an estimated $900 per year, mostly in increased premiums. By keeping law enforcement in the dark, insurers empower criminals to retreat for a time, only to reemerge running a more refined version of the same scam. What results is a high-dollar game of whack-a-mole. Major fraud schemes typically have one thing in common. Each starts with a smaller scheme that went unreported. The journey to a multi-million-dollar fraud case begins with one single step. Red flags accumulate like rolling snowballs, leading to an avalanche. Insurers and regulators who miss them or fail to prosecute them do so at their own peril. You can learn more about the latest in insurance fraud and how to fight it at the 14th Annual RGA Fraud Conference. Register today for this 3-day online event. We hope to see you there.